So instead of just looking at risk reward, risk reward, risk reward, I would like you to think a bit more about the probability of risk, the likelihood of risk. How likely are you to lose a trade? And if you want to think about, how do I justify my likelihood? You look at a trade and go, is it counter trend? If a trade is counter trend, yes, we spoke about this, it's got 30% chance of succeeding. So if you enter the counter trend trade, probability of risk is quite high. Is there news released soon? Since you cannot predict the results of a news, as much as you try to, if you enter the trade before a news release, probability of risk is quite high again. Are the indicators conflicting? Is price outside of Bollinger Band? Again, if you're buying and your price is way outside Bollinger Band, it's probably going to come back in. Again, higher risk. Is MACD changing? Maybe you're not buying, but it's suddenly crossed downwards. Again, higher risk. Or SAR, PSAR, near price, possible change. Risk, again, a lot higher. And then probability of risk. Is price near the support or resistance level? If you're looking to buy but it's near resistance, it's struggling to break above the resistance level, is it going to be likely? Very unlikely. If you put a stop loss there, is the probability of risk going to be high or low? It's going to be high because it's going to struggle to break above the resistance level. It's possibly going to turn back down. So we're not even talking about the amount of risk. And a lot of people trade and focus on only the amount of risk, forgetting about the probability of risk, the likelihood of risk.